Hey everyone, welcome to another edition of Bitcoin Brief with your host, Tone Vase. Today I'm being joined by Jimmy. There's a small chance Leah can still make it. We kind of like randomly did this on a 20-minute notice, had a couple of stories wanted to cover. Basically, after my show this morning on the S&P 500, I immediately went into the studio for another 3.5 hours of the Ernie Hancock show. I locally recorded it. I'm currently converting the video and then uploading the video. So I've basically been nonstop recording content for the last 6 hours or so. And here we go with the continuation of content. Jimmy, how are you?
I am good. I haven't been recording for the last 6 hours, but yeah, that sounds really kind of torturous, especially since the guy you were debating is like a Bitcoin Cash guy or something.
Yeah. But I think today was a little bit more civil. But if those are willing to watch another 3.5 hours of that, and there's another 2 hours coming tomorrow. I mean, this was basically what I signed up for this week. But it's one of the first people I met in crypto, and I'm on a mission to like convert him back to reality. Okay. And if I fail on this mission, then I don't know when the next time I'll be back here, but I'm doing my best. All right. I am limited on time as well. I have to have a hard stop 5 minutes to the hour. Let's go straight to screen share and we'll see where we are. I guess that's our first story. Yeah, you know what? We'll do the unconfiscatable in the middle of it. So this was an interesting story. Jimmy, you sent me this one. So apparently, and so what's going on is somebody wants to attack the Ripple chain. And this is interesting, right? So they want to clone the Ripple chain. They want to offer all of the XRP holders, not including the 66% of the XRP that is being held by Ripple, a clone coin of Ripple. At the same time, they want to short Ripple in the marketplace to profit with more money. And they want to do everything that Ripple's doing by basically cloning the idea of what Ripple is trying to do. And I got my own opinions on this, but and it's called Valor or something. Valor, there it is. And Jimmy, bring us home on this one. What's going on here?
Well, so there's a company that has a business model, which is basically let's take over Ripple and do something better, something like that. And they've been trying to raise money to do all this, which is short Ripple on the market. Offer this alternate coin or, do something, but basically they want to take over the position that the Ripple people have. And this is one of the things that's very amusing about these quote unquote decentralized altcoins. They're not really decentralized at all. If you can be taken over in any way, shape, or form, or if it's even possible that somebody can take it over, that tells me that you're not really decentralized at all in any way. So for me, this was an amusing story. I don't think they're going to succeed. I don't think they've raised any money. I don't think they're going to do any of this. But I find it amusing because this is something that every altcoin is going to have to think about. If you have a foundation, if you have a creator, if you have somebody that's in charge, if you have a token issuer, you are susceptible to being taken over. And once it's taken over under new management, they can do all kinds of things like issue new tokens or, confiscate the ones that are out there or whatever they want to do. That's their right. That's what you are signing up for with these altcoins. So it was sort of like it brought that reality home for me. And that's why I found this story interesting.
Yeah, see, I have a different take on this. Like it's to me, I mean, we all know that Ripple, the token, is a total scam coin. And to me, this is just an opportunity to create another scam coin and get paid with another crazy idea. Like there's nothing substantial to Valor. Like I see it from a slightly different perspective than Jimmy does here. And this is the huge argument I had all day today with Ernie in the studio, in that, okay, we all agree that it's bad that the government is printing money left, right, and center. And by government, I mean globally, like every government is printing money left, right, and center. But the solution to this is to create sound money, not well, if the government can print it, then I should have the right to also print it. And now, instead of 180 governments around the world printing money, you have 4 billion people printing money, and you have 4 billion different currencies instead of 180 different currencies, right? So to me, this is just like a scam coin that's even worse than the Ripple scam coin, trying to use the hype of the Ripple scam coin to hype up their own coin. So this, of course, goes back and reflects badly on Ripple, that if Ripple has the ability to create money out of thin air, why doesn't someone else have the ability to create money out of thin air? So the moral of the story is Ripple, the token, should have never existed. Stupid people should have never bought into it. Stupid people should have never believed in it. And Ripple, the company, needs to, face the penalty and admit that they created scam money or scam security, whichever they like. But instead, they're using their printed money to hire former SEC chairmen to defend them in court that they're not a security. So to me, like, this story bothers me. Like, I don't care if a bigger scam overtakes Ripple. It's kind of irrelevant to me at this point. And the way they're going about doing it is they're just trying to siphon money from the more uneducated people that believed in Ripple to begin with. Now, it would be great if all the Ripple believers now want to profit on destroying Ripple. I mean, that would kind of prove our point that all of these centralized currencies are useless. But now we're going to have this Valor coin, and then it's going to be all over again. So I don't really care. Like, it's insanity building on top of insanity.
Yeah, I mean, I think I agree with pretty much everything you said. It's just the concept that you could take over a coin is an interesting one, and somebody will come up with a model where they'll be able to kill a coin and make money off of it, and that's a startup I might actually want to fund. I don't know. We'll see.
All right. Well, speaking of taking over a coin, the coins seem to be taking over themselves by thinking that hard forks are so easy. So here's another attempt of Ethereum attempting to do yet another hard fork. Let's see how they pull this off. Like, I don't understand how a network as big of Ethereum can simply hard fork. And this current hard fork that was supposed to take place tomorrow is now on hold because of a vulnerability. Well, what kind of a vulnerability do you think it was? Well, of course, it's a vulnerability where you get to print yourself and just take any money that you like, very similar to what happened in the DAO attack, because all of these changes in Ethereum basically involve holding on to other people's money. And the moment you find a vulnerability in that contract, you exploit it and you just take all of the money. Ethereum, somebody found this bug in Ethereum a few days before the hard fork. They can't fix it in time. Now, my bigger question is, do the Ethereum people really think they're going to successfully have a hard fork? Do you remember when the last time Ethereum had a hard fork? Have they had a hard fork since the Ethereum Classic disaster?
I think so. They've done multiple hard forks, and this is how their community runs, is because it's very hard to run your own full node. So you trust somebody else anyway. And it's really only like 6 nodes, I guess, that have to really upgrade. The rest of the network.
Oh yeah, Jimmy, that is totally that is totally true. I'm sorry, guys. I was under the impression that people were actually running nodes. Since like in Bitcoin, I'm a total idiot here. When you only have a blockchain with less than a dozen nodes, then it's very easy to hard fork. My bad on that. This is a very simple task.
Yeah. The hilarious thing here, of course, is that they did a security audit, and the security audit found this bug like 2 days before. And they've been going on about Constantinople for months now, and 2 days before they decide to say we're not going to hard fork anymore. So anybody that upgraded their client in the last few months, you're going to have to upgrade it again so that the hard fork doesn't happen. It's hilarious.
So should we expect like 1 or 2 nodes out of 10 to fall out of consensus tomorrow?
Possibly. I don't know. They'll probably stall because there's no mining power on that side. But the key here is that when you have the crappy kind of like engineering practices that they do, you're going to have vulnerabilities like this. And I'm just surprised that it took them this long to find it. Or maybe they started the security audit like 5 days ago or something like that. But the fact that you have a vulnerability this big, this is not a simple bug, guys. This is like re-entry into multiple contracts and stuff. This is like a system-wide, network-wide vulnerability. Had this gone through, it would have caused all sorts of chaos. Like people would have been able to do all sorts of things. Likely they would have like tried to patch it, sort of like Bitcoin Cash style, like just like every couple of hours or something, and have checkpoints or something like that to make sure that certain certain kinds of contracts don't get executed or something. It's just it's a crazy situation that they have this in the first place.
And the point is, this would have been somewhat trivial to exploit, like the DAO hack, right? This isn't like the bug that was discovered in Bitcoin recently that would have been insanely difficult to execute. This one would have been just trivial for anyone with not even a like a 13-year-old could have done this easily.
Yeah, I'm not sure exactly how easy it would have been to exploit, but I mean, the vulnerability is definitely there, and you can read through the technical details on the reentry attack, but it's I mean, honestly, it's more a systematic problem of the platform that they built. It's you have weird callback situations like this, and it's not easy to secure stuff like that. And when you try to build things sort of by the seat of the pants that they're doing, you end up with vulnerabilities like this. I will guarantee you this is not the only bug found in Constantinople. There are probably multiple other ones, and this is not the last of bugs of this severity. It's going to happen over and over again.
All right, let's move on to the next one. And this is I found this one kind of interesting. Like, I have not been paying attention to the mining stats. We did cover the fact that Bitmain is going away. And the interesting thing is that the Ant pool is now down to 11%. BTC.com pool is down to 16%, and via BTC is down to 9.4%, which is tied for BTC.top. Now, I actually don't remember if BTC.top is affiliated with anyone, but we all know that Bitcoin.com and Ant pool and via BTC are all Bitmain's affiliations, and they have significantly dropped in the last couple of months, especially in the last year. And now we have an unknown set of miners and at 23%. Now, to make it clear, this is unknown. So it's unknown if this is a single mining pool, a dozen mining pools, or no mining pools at all, private companies. So a couple of questions here to throw off to you, Jimmy. Is this a good thing? I mean, is this a good thing that we have a 23% unknown set of miners? Is it good or bad, neutral? It doesn't matter. And what do we think about the dropping hash rate of the Bitmain's dominance in pools?
Yeah, good question. I'm not sure what the implications are, but certainly I don't think this is a single pool that's unknown, unless it's like some sort of private pool or something. Generally, if you are a mining pool, you want to advertise that you are finding lots of blocks, because that reduces variance for all your members. So this is why BTC.com, Ampool, BTC.top, Slush Pool, Bitfury, they all advertise within the block Coinbase transaction that they are the ones that mined it. It's a way to assure other people that want to join a pool, hey, we control this much hash rate, and your variance is going to be much lower by joining us, who has a higher hash rate than somebody else. The fact that 23% is unknown tells you that either they're corporate or something like that. There's always been, like, I think at least 5% that's unknown. I think it was closer to 10% maybe a year ago. The fact that it's increased to 23.1 tells you, okay, well, more mining equipment is maybe falling into hands that aren't necessarily wanting to pool mine, and those would probably be people like large corporations or possibly governments or sovereigns or something like that.
Or
There's nothing.
or possibly miners in like Venezuela and countries that you really want to stay under as much under the radar as possible.
Well, so if you are a miner in Venezuela, what you're probably going to want to do, because you're going to want the most frequent payouts as possible, is probably join a large pool. That way, your hash power goes towards that large pool, and nobody, like, you're not going to solo mine out of Venezuela. The variance is just too much. So so I don't think it necessarily comes from those places, though it's possible if it's like a government official or something like that, and they have access to a lot of mining hash power that they could. But it's a significant enough percentage that my guess is that it's mining operators that are maybe affiliated with electricity companies or something like that. That are getting the equipment especially cheap, and they're maybe starting to mine, and they don't need to be in a pool because they're in it for the long haul anyway. And this is a way to burn off some excess electricity that they're producing, something like that. That's my guess. I have no idea if I'm correct or not, but certainly if I were an electricity producer and I had extra energy, and I could sell it for like a penny per kilowatt hour, or I could, mine some Bitcoin. I might want to mine some Bitcoin because the equipment is just so damn cheap right now. I mean, you can get an Antminer S9 for like $100. So that means that from like how profitable is this? Like feeding it into this machine that they would have to burn anyway or something like that. I don't know, like that would make more sense to me. And they're the type that wouldn't need to be in a pool and wouldn't want to be known as mining because they're generally heavily regulated.
Yeah, no, good point. So the other question is, what does this mean? Like, what does this mean for the confidence of the Bitcoin network if the unknown pool or the unknown section of this chart starts to grow and it starts to approaching the high 40% category, like 48, 49. What do you think that would mean? Let's be proactive here. What do we think it means for the Bitcoin network?
Yeah, I'm not sure. So it could be multiple scenarios, and one could be very good, one could be very bad. So if it's like electricity companies or power companies all around the world just buying up Antminers as a way to like do something with the excess energy that they have, then it might be a very good thing because that would make it super decentralized. That 48% might be like 25 chunks of 2% or something like that. Whereas, a really bad scenario would be if a sovereign was trying to attack Bitcoin and they were accumulating hash power to do a 51% attack, like I don't know, some random country or something like that, then that would be also really bad. So it's all sorts of possibilities there. Until we get more information, it's really hard to say definitively one way or the other.
I'm trying to find a similar chart for Litecoin. Any idea where I can do that?
I think hash rate distribution, that second link looks pretty good. Yeah.
Yeah, but I wanted like a similar pie chart. I know they exist. I wonder where that chart. That's
a pie chart. Yeah.
Oh,
so
okay.
FT pool, Litecoin pool, LTC.top, AMP pool. Well, those are all unknown, aren't they? But they go to the same address, so I guess that's how they know.
Right.
But yeah.
So yeah, I was curious what the unknown section was on this. So I guess that's 22. So basically, we're talking. This is where unknowns begin, the gray area, right? So
yeah,
we're talking.
So it looks like about 25% roughly.
Oh yeah, so anything that's gray. So yeah, so that looks like about 25% of the pie. I was just curious.
You got that tiny sliver there towards the end. Those are all gray too. So you got to count those.
Yeah, that additional one, but that's 0.6, right? So
no. But all the ones after that, most of those are gray too.
Yeah, you're right. Most of those are gray, just a little bit. Yeah. So it's about a quarter of the pie. So you have slightly more unknowns in Litecoin. And I was just curious. So F2 pool is leading the way in on the Litecoin side of things. And hey guys, I found I found a use case for Litecoin. We get to see when Litecoin gets 51% attack.
I mean, if you can also look at Bitcoin ABC, I think, like cash.coin.dance. I think we'll have a chart. I think their unknowns are usually much higher.
Right. So there's still some discrepancy going on there. But so the thing is, I think that the market will panic a little bit, right? I think that like we're covering this news now when it's 23%. There's already been an article about it. But I think if this starts to approach 50%, I think there's going to be some genuine panic in this idea of, wait, we have an unknown that's potentially a 51% attack on Bitcoin, and all of the shitcoin people will, of course, hype all that up. But is it dangerous is the other question, right? Let's say an unknown is controlling 60% of Bitcoin mining. Do you think that's dangerous for the Bitcoin network for a 51% attack? And I'm going to lean towards that it's not, because of the economic incentives of mining Bitcoin. Now, if I saw an unknown in Litecoin at 60%, I would say that is very dangerous because there is always exits to get out from. You're not going to destroy the concept of a blockchain by 51% attacking Litecoin, but you will destroy the concept of a blockchain by 51% attacking Bitcoin. Your thoughts, Jimmy?
Well, so here's the thing that really kind of confused me last week, and that was the Ethereum Classic 51% attack. What happened afterwards was that Ethereum Classic actually didn't go down in price that much. So, you know, there's this idea that if you can 51% attack Bitcoin, that you can short it on all these exchanges, and that it would cause a giant drop in price. I'm not so sure that that's a correct assumption anymore. To some degree, you know that it's a possible thing, but it's not exactly sustainable. So I think to a large degree, the people that are holding some of these coins, they realize, you know what, like, it's a temporary problem, and it takes a lot of money, and it wasn't my money, so it's fine as long as it's not my money, something like that. So. Yeah, I mean, obviously, if it gets above 50%, people are going to start to worry. But you know, like you said, there are economic incentives for everyone else too. So, like, if there's that much hash power available, then for that cheap or something like that, then other people are going to want to get in on it because it's either going to be profitable or very cheap to run a lot of those things. And at that point, like, you can join a pool and like sort of beat that back, I guess. But yeah, I wouldn't worry too much about it. If it grows past 40%, then we can start talking. And if there's evidence that it's coming from a single place, then yeah, we should start worrying.
Okay, so for the time being, I agree with you, not a concern.
Mm-hmm.
Perfect. All right, let's move on to our final story, which is your story. I'm sorry, Jimmy, it's the only article on our today's list that I did not read. I think I know what Bitcoin is, but maybe I should probably read it after it's over. Tell us about the article, why you wrote it, and why isn't this in like Bitcoin Magazine, man? You write for them now. Probably it's something that they want to hold on to in their educational section, no?
Oh, maybe. I mean, I'll offer it to them as well. But for now, like I do want to work on like sort of getting more of the basics out there. And this is an article that argues that Bitcoin is decentralized digital scarcity, which didn't exist before Satoshi Nakamoto invented it in 2008. And that's the major innovation. And, you know, like a lot of people sort of know it, at least somewhat, but I tried to make it clear so that you can make the value proposition clear to other people when you're talking about it. And you know, it's going to be a multi-part series. It's on the front page of Hacker Noon, and that's a publication that you know, I wanted to see what the traffic there was like and things like that. So, but yeah, it's not that long. It's maybe a 4 or 5 minute read. And it goes into scarcity. It goes into you know, decentralized scarcity versus centralized scarcity, and how they're just very qualitatively different, and how in the digital realm we really only had centralized scarcity until Bitcoin came along, and to a large and like to this day, it's the only one that's really decentralized in the digital realm, and that's why it has value, while all of these altcoins, at least in my opinion, do not. So so that's what that article is about. Have a read. It's I'm hoping that it becomes something that that you can send around to, you know, people that don't know anything about Bitcoin, and just sort of be like, hey, here's what it is and here's why it's valuable, and you know, something like that. So that's the point of this article, and I hope to continue doing it in part 2.
All right, very cool. Thank you for that. And quick question: is Hacker Moon a subset on Medium? Like, I don't understand. Like, I used to write on my own blog, like on my own .com. So what's the difference between Hacker Moon and Medium?
Hacker Noon is a publication. So I don't know if you're familiar with Bill Simmons. He's like a famous sports writer, but he has a website called The Ringer. Ringer runs off of the Medium platform, but they're separate publications. So it's kind of like a digital magazine, if you will, and a lot of people write to Hacker Noon, and they have a lot of you know, good articles that show up on Hacker News and things like that. So
So is it like just using the Medium servers and interface?
Yeah, so they use the Medium software, but they are their own publication. So yeah.
All right, very cool. All right, to check that out, all these links of the stories we covered today are, of course, in the video description.
Do you want to talk about Unconfiscatable?
Yeah, let's cover the conference. Let's see what's going on. I think there will be like one seat. Like, someone needed a refund for the Unconfiscatable dinner. They couldn't make it, and we may have one seat opening up because we literally have X number of chairs, so we can only have X number of people. So there might be one seat going up for sale. Keep an eye on that. Not sure what the fare is. So we published the agenda, and Jimmy Song is going to be on 2 panels. You're going to help explain why Bitcoin and not blockchain, and you're also on the developer panel, along with Peter Todd, Johnny Dilly, and Powell, who is the CTO at Slush. The CEO of Slush is also with us at the conference. He will be playing in the poker tournament, but he felt it was better to put the CTO on the developer panel, which kind of makes sense. I mean, CTOs are usually more technologically.
Yeah, I'll definitely be asking him about Better Hash, because they better be bringing that, baby.
Excellent. Hey, hope you guys are watching. And other than that, Jimmy Song, you got your workshop, you got your 2-day workshop. My workshop is Thursday. Tyler's workshop is Friday. Tickets are still
Thursday and Friday.
Yeah, yours is Thursday and Friday. I didn't want to conflict with Tyler because we're both finance, so we're on separate days. That's about it for me. To register for Jimmy's workshop, you go ahead and click on his face, and it takes you over to his website, Programming Blockchain. He will also be doing one in London. Hey, Jimmy, sometime this weekend, we got to decide which night we want to do the carnivory dinner in London and who's going to be responsible for registrations. We can do it through my site, or you can do it through how you usually do it. We'll figure that out.
Yeah, I think February 7th is the date I'm looking at, because they have a speakers dinner like February 6th, and February 8th. I think a lot of people are going to be leaving and things. So
right. So my workshop is going to be February 9th. So is yours, right? Okay.
9th and 10th.
So the speakers dinner is what, the 6th?
Yeah. So I was thinking the 7th, because that's after the first night. That's the first night of the conference, and then the second day happens the day after.
Sounds good. So you and I will have to pick a restaurant and start taking registrations. So I'm
looking into that already. So yeah, we'll figure it out.
Good. Okay, I actually had a few suggestions, so I'll shoot over. Some people, I have a huge following in London. People are already suggesting restaurants, so I'll shoot that over to you.
Okay, yeah. Send them over. I was thinking Brazilian steakhouse, because that's like just awesome.
Yeah, that's kind of the simplest thing. We're probably gonna end up going with one, but yeah. So you and I will discuss. We'll probably launch that in a couple of days, or like in 3 or 4 days for registrations. All right, that's about it as far as. I'm going to add a lot more workshops. I'm also going to start doing webinars. I think Jimmy is looking into webinars as well. We'll bring you more news on that. All right, price time. I got about 15 minutes. Jimmy, you want to stick around? You want to go?
I think I have to get going, though. But it was great, and this song is done.
All right. Hey, thanks, Jimmy, for joining, and we'll see you on the next one. No idea when that is. Okay. So I'm going to get to the S&P 500 in a minute. Let's take a look at Bitcoin. I have not looked at Bitcoin all day, other than for a brief second this morning on the podcast. Please watch the episode with Tyler and I from, I think, yesterday. I had no intention to do a deep dive into the long-term view of Bitcoin. People love that episode from yesterday. Please check that out. Looks like we are back below $3,600. Like I said, I did not buy into this little jump. I think Bitcoin is pretty weak here. The week is about halfway through. Today's Wednesday. We're halfway into the week. This is not a very positive candle. If this ends as a red candle, this would be absolutely devastating. It does look like Bitcoin wants to either go down or simply stagnate. Here's the daily chart. Oh, by the way, people that watched me this morning and saw me using the new indicator, the new upgraded TI indicator, that has not yet been released. I'm hoping that everyone that has access to the TI indicator automatically gets the new version, gets the new code, or TradingView will notify them that the new code is available to just use it. I'm gonna release it first chance I get. I'm still testing it out. I'm making sure that it works as it should. We fixed a couple of things. One of the things that we fixed is we deactivated. We should have done it to begin with. I thought we did. It was when the rule set, eliminating the countdown when you break the setup trend line. But we didn't have it that way. Probably an oversight on our part, but it didn't like cause any harm. It was just showing some extra information that it shouldn't. Other than that, I think there was like one little bug in one weird sequence of the combo. The combo was so hard to program. Anyway, I'm getting into the weeds here. Here's the daily chart. The daily chart is hovering around this blue line. This is like the blue line of death here, or the last point of support. I mean, the fact that we had a daily close lower than the late December close is absolutely devastating. This was a big nail in the coffin, not a coffin of Bitcoin. Let me not be added to the Bitcoin obituaries playlist, but this was a huge nail in the bounce to 5,000. Just this daily close was devastating, and this daily close has gotten me to almost be a complete bear here. We are technically hovering at my 3,600 line. So there's a small chance we can still go to 5K, but that chance is dwindling very, very quickly. I am looking at lower lows in the very near future. The 12-hour chart has been like our best element here. We did have a 9 on a 12-hour chart. We've had a 1 to 4 candle correction. It lasted for 2 candles. We are now trending down. If the next candle, which starts in 3 hours, starts trading below the low of the current candle, and we now have and my new code has an alert for that now, which is great. That is absolutely devastating. Look at your CMF. I think the CMF is a very useful indicator. I mean, it wasn't as useful over here. I was really optimistic that the CMF was positive. As the price started to drift, the price went up, the CMF did not go up, and it all went down. So to me, this is a bearish sign. The MACD is trending lower. It's below 0. The RSI never had a true rebound. The 12-hour chart is pretty bearish. We also pierced the blue line, and it's just not looking good at all. Here is the 1-hour, the 4-hour chart. The 4-hour chart might have given you a red 2 below a red 1. You still have 3 hours to go in this candle. The 4-hour chart looks bearish to me. I don't have time to get into the details. The 1-hour chart, let me get the indicator up and running. Here is the 1-hour chart. The 1-hour chart started to show a tiny bit of hope right here, got completely rejected by the setup trend line. You then price flipped into a red 1. You had a red 2 go below a red 1, setting up a short trade. That short trade is still ongoing. You're on a 6 of 9 setup. You're on a 9 of 13 sequential. Your CMF is a disaster. I'm sure I said that yesterday as well. And I am looking for lower lows at this point. I mean, pretty much all the time frames are bearish. The weekly is maybe neutral. It's a 1-minute chart of Bitcoin. This was for code testing purposes. No reason for me to look at that otherwise. The short interest. So this is BTC longs divided by BTC shorts. When the longs start to get out of hand, the price tends to drop. People continue to be leveraged long. So I'm not, and look at leverage shorts are non-existent. So that creates a nice vacuum for more downside without, most people profiting, because markets have this unique way of separating people from their money. GBTC is holding steady at 4.2. The premium is holding at 16.9. I have not logged into my trading account in weeks. And the market's about to close in 15 minutes, and I'm not going to do it right now. So I'll have to wait till tomorrow if I want to do something with my GBTC position, but I'm okay on that position, so I don't mind. Ethereum, I don't care, and nobody else does either. It's not even moving. No one even cares that they're having a fork. Completely centralized blockchain, and I feel sick for even calling it a blockchain. Please go to proof of stake, so I no longer have to call you a blockchain anymore. What was that? That was oil. Wow, oil is up, a little surprising. Not going to get into it. I want to get to the S&P 500. The dollar is up, not too surprising on this one. I'm still looking for a slightly bigger pullback in the dollar, but I do think we're going to break out. If not this year, then certainly next year. The S&P 500. Here's the future of the S&P 500. Yes, my futures are delayed on TradingView because I have not connected my brokerage account to the TradingView chart, because I don't even know if they allow my broker to have connection. It's amazing how many dumb people on, I got to turn off comments. It just bothers me to no end. They're like, this trader doesn't have live data. Well, I don't need live data for markets I'm not actually trading. And I'm not trading futures anymore. That was my life for about 2 years. I traded the futures markets, S&P, gold, oil. And one of the ways I was trading that market, I talked about it this morning on my video, trying to pick the top of the S&P 500 at 10 a.m. Please watch the video. I ended that video as we were making lows. Now, as the price was falling and I was able to properly time the high of the S&P 500 this morning, we're going to talk about the fact that S&P went and made a higher high in a few minutes. But this morning, the 10 a.m. candle was this. I was live streaming this candle and trading this candle and how to go about picking the top in the S&P 500 on this candle. I sent out a tweet yesterday that I expected the top in the S&P 500 at 10 a.m. Now, what did I mean by 10 a.m.? I meant the 10 a.m. 10-minute candle. I explained that on this morning's video because I started the video just as the 10 a.m. candle started to form. And I talked about, hey, I'm looking for a high on this candle to top the S&P 500. I am then looking for a pullback to close the gap. Did we close the gap? The answer is we did not fully close the gap. We went halfway into the gap, and I talked about potential support points for the day trade in the afternoon. One of those points was the high of the previous day. The other point was the close of the previous day in the S&P 500. We were perfectly bounced off of the high of the previous day. And I talked about, hey, I would be looking to take about half my profit over on this candle, somewhere near the bottom of that candle, or I would be setting a very tight, trailing stop to get out. And the other stop would have been below break even. This was a no-lose trade once it started moving in your direction. Now, did I expect the S&P 500 to continue to go down today and not breach the 10 a.m. high? Absolutely. So around this candle, when I stopped my stream, I went into the studio. We did a 3+ hour podcast. I came out of the studio. I read the articles, and I'm doing this podcast with you now. So I completely missed this, so I couldn't stream it. Now, what does this mean? It doesn't change the fact that you are on a daily 9. Now, I really wanted this daily 9 to be a reversal candle. The probability of this 9 being a reversal candle with 10 minutes to go before the market closes is incredibly low, if not 0, okay? Therefore, we did not get a reversal candle unless we get a crash in the next 10 minutes. I actually possible that I lost connection. Okay, I think I'm back. All right, let's get back. So it's possible that I lost connection when I tried flipping the chart. Oh man, changes you made will be lost. All right, let's give this a shot. Let's see what happens. Futures, right? Like the daily cash market of the S&P looks like futures is a 9 here. So I'm still expecting a 1-4 candle correction. I thought it can happen on this candle. It is also likely to happen on tomorrow's candle. So I'm still looking out for that. Okay. So nothing has changed. Gold, I continue to think that this trend line will reject gold. Maybe we'll cross this trend line by a week or two, but I continue to expect lower price to the stock right now. I'm still hoping my S&P loads, which it's not doing. Yeah, I know. I'm on again, Phoenix, Arizona. Chart layout was changed. Locations. Reload. Oh no, my sure. I have no idea what happened there, right? But in any case, I think this is a good cue to get going. I'll cover the S&P 500 again tomorrow. I'll try to do it at the market open, and we'll talk about it more. And please watch my prior videos if you can hear me. Yeah, like I said, I'm not sure what's going on. Anyway, either way, I gotta go, guys. Happy that most of this video streamed normally, and I'm gonna cut the video feed. I'm gonna cut the screen share anyway. Okay, so here it is. It's back. I'll do it real quick. Okay, so there it is. Here's that last 5 minutes. It is still possible that the S&P is gonna close at a new low. Still possible. We got 7 minutes to go. I'm not surprised that the S&P is selling off at the end of the day, because the S&P 500, the daily chart of the S&P 500 is at resistance. It's on a sequential 9, which I find critical. Just go back and look at the last 2 times the S&P 500 had one of these 9s. It was right here, and the market reversed greatly, and it was right there, and the market reversed greatly. Okay, this is not an indicator to sneeze at. This is an indicator to pay attention to. So I am not surprised that there is a sell-off in the last 10 minutes. However, it's still a pretty bullish picture. Would I be long the S&P 500 into tomorrow? Absolutely. Tomorrow, ideally, I don't want a position in the S&P 500 tomorrow. I'll evaluate it at market open. I believe the S&P topped today. I can be proven wrong tomorrow. I thought it was going to top at 10 a.m. I was wrong by about $2. It looks like the S&P topped at 26.2576. I expected it at 26.2380, so I was off by about $2. There was still a very profitable trade, even though I was wrong on where the top is going to be. I still think this is going to be a top on a daily chart, meaning today. I will try to time it again tomorrow. But I'm not going to, this is the kind of stuff I teach in my private workshops or on consulting calls. This is not normally free content that I give away, but screw it. And eventually I will be doing webinars and stuff like that. All right, guys, I will cut the screen share. I got to run. I'm a little too cold to go in the pool, even in Phoenix. And I will see you all on the next one. Please check out unconfiscatable.com. talk to you all